All right, Brenna, we should be live.
Hello.
So, welcome back here, everybody, for this month's What's Going On in Real Estate. So, I'm joined as usual with my much better half here, Brenna Harper. So, Brenna, what's been happening over the last week with your life? I mean, we're not in the same room. This is a little
I
different.
know. Yeah, I'm back in the office, which is awesome. So, Land Title opened all of our offices back up June 1st. We had a delay for 1 week at our Lodo office because we're right there at 17th and Wine Coop. So, with all of the protests and everything going on, we decided to stay home for one more week. But this week, we're back in the office and happy to be here. So, one step closer to feeling a little normal.
Back to a little bit of normalcy now that you're not working from home.
Yep.
Yeah.
No more yoga pants.
I gotta put on real clothes, and you look great today.
Thank you.
Perfect. So, what as we look into the real estate market, and I think there's some interesting things that occurred here over the last month. Before we share the slide deck, and thankfully now here with some newer technology, I can actually share the screen. What kind of jumped out to you from last month's real estate?
Yeah, I think the biggest changes you'll see as the number of homes that have gone under contract is massive. Because obviously, as we talked about last time, people able to do some showings. So we were totally locked down as far as being able to do showings for about 18 days. And when I heard that number, I was like, I swear it was longer than that. It felt so much longer. But that really played a big piece of what our numbers looked like in April. And so it's very nice to see as people are starting to be able to go back to work and, obviously still following all those safer at home guidelines. Interest rates are still incredibly low. A lot of people getting under 3%. And people are ready to buy houses. And I know you and I have had conversations about what it feels like out there. And we're definitely feeling like that delayed spring buying season because it's the world of multiple offers, things going under contract very quickly, tons of showings, showing traffic, and things being bid up. So it's a different story than this time last month, which is good for the industry. It's good for the economy.
Yeah, definitely felt it as I was out active here over the last several weeks, getting into homes. Saw a lot of real estate agents out with their clients, people masked up, wearing gloves, following the protocols that are in place for safe real estate showings. So very exciting. A lot of things happening in the market can definitely be a little bit challenging. So, as we jump into the slide, and I'm going to go ahead and share the slides here. So what happened in the highlight reel, Brenna?
Yeah, so obviously that first point, demand made a big comeback. So we're at 104% increase from just April. So the total pending transactions for May was just over 7,000, which is actually a 10-year, over a decade high. So we haven't had that many homes go under contract in over a decade. So that is what we like to call a leading indicator. So one of the first things that changes. And so that's a good sign that things are coming back. Obviously, active inventory is still down about 19.6%. So obviously supply very low makes demand very high. It's a little bit different in detached single families, down 26%. Attached single family, or like those condos and townhomes, is only off about 4.3%. But compared to this time last year, we're still about 1,400 less homes available. And when we're in such an extreme seller's market anyway. That 1,400 homes, I think we're feeling it.
Yeah, without a doubt. That's a lot of homes not on the market. That's a lot of signs not in yards, options for folks to take a look at. So it's being felt, I think, by the real estate agents and the buyers, and for sure the sellers. There's a lot of activity as we continue to move forward from the COVID shutdown.
Yeah, I would definitely say the buyers have uh, jumped on the buying train a little faster than the sellers have been ready to list. So we're hoping that as sellers are seeing the buyer traffic and what their homes are worth and what they could potentially go for, that we'll continue to see that active inventory go up, because the buyers are definitely there and they're ready.
Yeah, without a doubt, I think people are confident to be able to move forward. And I got this question a lot as I was talking to clients and people that would reach out: is, why was real estate essential during this shutdown? Well, there's a lot of folks that have to buy or sell. They have to move, whether they're getting a job transfer or their lease is up, or unfortunately maybe somebody passed away and they need to sell that house. Real estate transactions have to happen, and we're seeing that the buyers that are there are in that spot where they've got to make a move, and sellers are making a move, and I think it's advantageous for sellers. And given the low interest rates, finding the home's a good deal, a good opportunity here for the buyers.
Yeah, absolutely.
So I like the slide that you've got up here. Now, this is an indication of showing traffic from a service that most agents are utilizing for scheduling showings. So what is this indicating?
Yeah, so the blue line is 2019. So you would see pretty much what we would expect as it kind of ticks up throughout the year. At a fairly steady pace. And the orange line is obviously this year. So we have this huge crater in the middle, where we went down to virtually zero showings and then it peaked back up. But the promising part is that we are pretty darn close. We're right underneath where we were this time last year as far as showings go. And keep in mind, that's with all of the stringent guidelines. So people have to wear gloves, they have to wear masks, they can't do overlapping showings. The sellers have to clean. So there are I think there's still less of what we like to call like the looky-loo. So people that are maybe, it's a nice day, hey, let's go look at a home. I still feel like there's very few of those, where in the past years, I think we got a little bit more of that. So I would say there's even more buyers that are actually willing and ready to buy than there were this time last year, even though we're a little bit lower, just because that if people are going through all those steps and taking those calculated risks, that they are really serious.
Yeah, no doubt. The folks that don't have to buy a home, that just typically wandered through open houses or would call a real estate agent to just check out a property, hey, if the dream home fell in my lap, maybe I would buy it. That's not happening right now because there's a lot of hoops to jump through just to be able to get to show properties. So very interesting to see, right, how far that dropped down as we weren't allowed to do showings, and then really has rebounded up and picked up relatively quick.
Yeah, so basically if you look at this, and it's kind of small, but so April 27th was the safer at home order. So that's right about here. So you can see it took a quick turn. So as soon as people were able, they really got out there and started looking.
Well, we shared on a previous broadcast that the first day after the safer at home order was in place and showings were allowed, that it was the busiest day for showings the entire year, followed by the next day, even busier. Another 1,000 showings happened literally the next day.
The next week, yep.
Next week, excuse me.
So from week to week, there was still another 1,000 showings increase from the week before. So, I mean, it's evened out a little bit, but it definitely recovered fairly quickly, which is good.
Yeah, thanks for keeping me honest on that.
Yeah, you're welcome. That'd be a lot.
So this market snapshot, I'm familiar with this graph. Obviously, you're familiar. We look at it a lot, but there's three different lines. There's a red line, a blue line, and the green line. So
Yep.
what is this? What is this showing? What are we paying attention to here?
So green is active inventory. So we talk a lot about cycles in real estate and seasonality in real estate. So you'll see kind of these waves that go through. And they're not identical, but they still kind of follow that same trend line. So obviously here, if you can see my cursor, is where we're at right now with active inventory. So even if we were following the trajectory without the COVID impact, we would still be pretty low this year as far as active inventory goes. But it definitely took a little bit of a hit. It's flatlining out a little bit. So it'll be interesting to see in June if that comes up a little bit more. But yeah, so active inventory is still historically low, as we talked about. The blue line is pending, so that means it went under contract. So again, with that kind of cycle seasonal line, you see this nice rolling hill, and then you see this just massive drop off. But then with the leading indicator that we talked about, we spiked back up. So if you look at this and you were to draw kind of an imaginary line, we're actually higher than we were this time last year. So this is the number we were talking about that's at a record high for that decade. So a lot of people are talking about, if we're looking at this data, obviously there's some sharp drop-offs, but it's looking like it's going to be like a little blip. So if we were just to connect this blue dot from let's say March to June, and just forget about April and May, like a lot of us would like to, I'm sure, then we're pretty close to on trend with what we should see. So that's, again, a good sign for recovering and kind of getting back to what we're used to seeing as far as that seasonality and what's going on. Now,
Yeah,
oh, go ahead.
Oh, I was going to say, it's almost like we were on a trampoline, right? We jumped down onto the trampoline, bounced right back up. Really borrowed from April to jump that into May. So, if we balance that out a little bit, I'd see probably a little bit more of a typical trend line than that sharp drop off and rebound.
Yep, absolutely. Now, solds, we talked about pending being a leading indicator. The solds is a lagging indicator. So obviously, typically from the time it goes pending or under contract, it's about 30 to 45 more days until it's marked as sold in the MLS. So that's why when we're looking at this red line, you see over here, it started to peak up with the rest of it, and then it kind of slid down. So it wasn't quite as big of a drop off, but it's not recovering yet either. So obviously, with the pendings being so high, we do anticipate this to spike up closer to a more normal level for this time of year in our June numbers. So don't let that scare you. It just hasn't caught up yet.
Well, again, if we borrowed for the under contracts from April to feed into May, since the solds are going to be another 30, 45 days, maybe 60 days behind, we're probably borrowing May closings to get into the June, July, et cetera.
Yep. Yep. So it'll be interesting to see, because as you look at this from last year, kind of the peak of that sold market was May. And then it kind of trickles down throughout the rest of the summer. So that's what we're talking about when we say a delayed spring buying season, is that we don't think that this is going to start to trickle down. Obviously, it's already down. So June, July, maybe even into August, those solds might be going up. So that will look a little bit different than we're used to seeing on this graph. But it's almost just like the whole thing was pushed 2 months. So, obviously, like we all like to joke, we don't have the crystal ball, but that's kind of what we're anticipating based on what we're seeing right now.
Yeah, we're really seeing that the folks that have been really concerned about, are we headed back for another bubble? Are we headed back for a complete market correction? So far, the numbers are not indicating that.
Right. Yep. So I think if inventory was at an all-time high, we might be having a different conversation. But right now, and we'll go into this in a little bit, we are under 1 month supply of inventory in most of our markets, which again means if no more homes came on the market, it would only take a month for all of the homes to be absorbed by the current buyers. So balanced market is anywhere between like right around that 4-month mark, as far as it being equal opportunity for sellers and buyers. And we are under 2. So that still puts us in a position where supply is very low, demand is very high, and there's less of a chance of the quote unquote bubble.
Yeah, as the inventory level climbs, obviously we're having more homes hit onto the market. That usually starts with fewer showings. Fewer showings, fewer under contracts, inventory levels climb. So there's several leading indicators to get there.
Yep.
And what we saw 12 years ago, and really the years leading up to it, was inventory levels were going up, and so were the prices. Well, demand wasn't going up, the prices were going up. It was actually defying economics 101, right? Supply and demand. When supply goes up, demand stays constant, the prices go down. That's not what was happening. So what we're seeing right now is truly still supply and demand market versus a bubble that somebody might be concerned about.
Yep. So this is what we were talking about, the month supply of inventory. And this is actually, I'm looking at the wrong one here. So if we look at the whole Metro Denver area, we're at 1.78 months, which is actually up almost 11% month over month. So from April, which again makes sense because April was kind of the peak of the pandemic restrictions. But we're still down at about 2% year over year. So less inventory, obviously less month supply of inventory. But I don't know if we can really see this, but we'll kind of talk through it.
Well, I think what it's showing, right, is that we have a seasonality rolling hills there with the inventory levels. So, with the month supply of inventory. So, seasonally it's going up and it's going down just like we would expect. So May of this year compared to May of last year, it's down a little bit. So May of last year was up over April of last year. May of this year up over
excuse me.
Bless you. Bless you. Up over last month, right? So again, something we would typically expect to see.
Yes. Yeah, great point. So something else I know that we wanted to talk about was the different kind of price points here, and what that's looking like if we break that down. So let me jump here if I can.
And by the way, for those that are watching the videos, if you want copies of these slides, you want to talk a little bit more about the slides, let me know, and we can get you clearer picture, clear view of what this is. Right now, this is a general overview. But if you want the details, the specifics, let me know. We'll get that to you.
Yeah. So what we wanted to talk about on this slide, and we're don't want to belabor the point at all, but this is showing active and sold by price range. So when Matt was talking about being out in the market and how things felt, this kind of breaks it down for you by price point. So depending on where you're at in a specific price point can really determine what you're feeling if you're a buyer or if you're a seller, and you're having multiple offers come in or maybe not as many. This is a great place to look. So if we look at this, I think the most competition or one of the highest spots for competition is this 300 to 399. Now, obviously, there's only 788 active homes in this price point, which if we looked down here is 6% down month over month, but it's 29% down year over year. Now, what we're seeing here is because there's such low inventory, things are getting bid up. So if you have a home that's at $399, it's now being pushed into that 400 price point, just by bidding it up. So we only have 788 homes, and some of these people that usually are in the 400 to 499 price point are popping down into the 300 to 399 price point so they can play ball. So the inventory has gotten tighter, and the amount of people looking in this price point has gotten increasingly more. So, I mean, you're seeing a ton of cash to close and multiple offers, flash sales, which is under that 7 days under contract. And it's very competitive in that price point because it's actually being pushed up in value.
Yeah, and as the markets continue to appreciate, there's fewer and fewer homes in there. 3 years ago, the homes in that 300 to 400 price point are now in that 400 to 500 price point.
Yep.
Good news is the with the interest rates as low as they have been, even though we're seeing the increase, we're still seeing the monthly cost not change that much.
Yep, absolutely. What other questions did you have for me, Matt?
Well, the a couple of questions that I had, right? If you were thinking about selling a home right now, what are 2 or 3 metrics, statistics, or graphs that you would want to look at, specifically as it relates to information on your home, right? Pricing, buyer inventory, I mean, whatever that might look like. What are you curious to look at if you were going to sell your home?
Well, this is one of them I would look at, because this kind of shows me how much competition I have in that price point. So it also, if I'm on that border between 395 and 405, most people when they're searching 400 is, or this could be for 500 to 600, but any of those kind of, those next jumps is people look up to that and they don't necessarily look over. So even if you go up to 401, you've just opened a whole new pool of buyers, right? So I would want to be looking, and we'll just keep using this example because we've been talking about it, the 3 to 399. If my house is right on the cusp of that, right around the 400, well, I would probably price it right under 400 because there's less homes, which means that there's more demand. Because the difference between 395 and 405 right now, honestly, that home that's at 395 might end up getting more at the closing table because it's been bid up by people that have, coming down to 399. They have more room to play, and they're gonna come to play ball. So I think some people are like, well, that can be scary, putting a lower number. And you'd also obviously don't want to lowball it. That's not what I'm talking about. But if you're just talking about a couple $1,000s one way or another, it can be really a game of strategy, and just looking at where you're going to have the most competition, and what that looks like. So that would be one place. The other place I would look is days on market, because that's just telling me how aggressive we can be. And how fast that's the wrong one. Days on market. Oh, it is this. Okay. So this is telling you how many days on market. So we didn't really look at this one yet, but year over year, we're at 23 days on market, which is still historically pretty darn low. But just to set expectations of, how quickly things are moving, how aggressive I can be with pricing, and what do I need to be talking about with how quickly we should be making price adjustments if that conversation comes up. So that would just be something to kind of see what is the speed of the market so I can be prepared for it. And then the other one that I would look at is the list to sold price. So this means from the price that it's listed out to the price that's sold, what is the percentage of that I'm getting? So overall here, for detached single family, we're at about 99.53%. But if we break it down here, it's again into those price points. So I would just want to know, what are people getting in this price point? Is there a big difference if I jump from one price point to the next? What are people doing? Just, I think the more information, something we talk about a lot is communication, and having, you know, real estate is local. So yeah, we can look at this all, but Adams County is different than Arapahoe County, that is different than Jefferson County. So there's some of that I would probably want to pull on a more local level, because if I'm selling my house in Arvada, I don't really care what homes are selling for in Thornton. So I would kind of just look at that and see, so I felt good and knew what was going on before I put my house on the market.
Well, for sure. And it's, I love what technology has allowed us to do, because real estate is a hyper local entity. So we have the ability to pull the stats based on zip code, based on a city, and even specifically into a neighborhood. So if you live in Rolling Hills, for example, and you want to know what's happening in Rolling Hills, we can get data specific to Rolling Hills. What's the neighbor's house selling for?
Yeah, and some of that big data on neighborhoods can be tricky just depending on the size of the neighborhood. But we can definitely get down and get very specific as to what's happening and what's happening recently, because what your neighbor's home sold for last year doesn't totally matter right now, because they're different market conditions. So,
well, and I would even say that 6 months ago is a different market. As we look at what was going on 2 months right now, 2 months ago, 90 days ago was a completely different market. So there's a lot of things that are happening. So as we look at the hyper local level, we look at the big picture, the 30,000 foot view level, all of it tells part of a story, and we look deeper as to what that story tells us. So.
Yep. And I think, a lot of these reports that I looked at, or quote unquote looked at for being a seller, I think you can just adjust what you're looking at and use the same tools as a buyer. And again, I think especially on the buy side, there tends to be more emotion on the buy side. And if you have some of this data, it can help set up expectations. Because if my budget is $500 and I'm going to look at a home that's $499 and every home is selling for 100%, well, I don't know that I have great odds with that. So maybe I need to be looking at homes that are a little bit lower. Just kind of knowing what you're getting into, so you don't fall in love with something that you can't have, or if there's a better strategy. You and I were talking this weekend. Okay, well, if there's a home that's listed for 500 and it's going to sell for 550 because it's being bid up, well, maybe I want to look at a home that's actually worth 550 and see if there's more options there. If I've decided that's what I'm doing. So it kind of depends. It's not always just about the list price. It's about what you're going to pay.
Well, without a doubt. And it's interesting around human psychology, because we like to think that we're very logical people, especially if you're like me. I tend to want to be very logical.
Mm-hmm.
Yet we do things on an emotional basis. So, that home at $420,000, if it's worth $410 and they listed it at $420, buyers are still going to be sensitive to that, and they're not automatically just going to pay that much for it. Yet if they listed it at $410 or maybe $405, because there's going to be so much demand for it, it's in all likelihood that somebody's likely to say, well, I want that house bad enough, I'll pay $425 for it. Where they wouldn't have paid $420 if it had started that way.
Yeah, so it kind of goes both ways with what you're looking at. Yeah.
Well, absolutely. And kind of that old school mentality of, well, gosh, why don't we just start really high? We can always negotiate down. Real estate, in particular, as of the last several years, has not proved out to do that. What it has done is it said, if you price it within the market may bid it up. Now, when I bought my first home, this was a buyer's market, so I had a lot of homes to choose from. There was still a situation where, the house that I ended up buying, they got multiple offers on that house because they priced it correctly. So even in a buyer's market, you price it correctly, and the likelihood that you're going to get more over asking price, you're going to, get that done, is still very high. So as a buyer, you take a look at, well, if it's really nice, it's move-in ready, it just hit the market, it's probably priced right. It's not going to sell at list price. So I need to be looking at something that's a little below my max, or I need to be looking at something that's maybe not as nice. I might have to do some more yard work or some more painting, or more often than not, look through some really bad photos, because there's some great homes on the market that just have bad photos. They're not presented well.
Or something that's been on the market for longer than a week or two, right?
Yeah, and those are the homes that tend to be on the market a little bit, right?
Yep.
Because nobody else wants to look through the bad photos to give it a chance.
Yeah. So there's a lot. I know it can be a little overwhelming for buyers right now, especially in um, certain price points. But there are different strategies that you can talk with your agent about to feel more prepared and to feel like you have a better handle of what's going on. And if you need to change things, if you need to change what my price point is or where my location is, or can I paint the walls? Yes. Is that pretty easy? Yeah. Some of that kind of stuff, it can really help and make your experience better.
Yeah, without a doubt. Well, I'm a numbers geek. I like numbers because they tell a story, and they're going to tell me, okay, based on what we're seeing, how should we be prepared? How should we be looking to move forward? And I'm always going to investigate to what the numbers look like. So I jumped off of the slide deck. That was all. I was assuming that was all we had to share on the slide deck. I didn't jump ahead and cut you off on anything.
No, as we're teaching our son, all done. Yeah.
All done. The baby sign language has been good. So as we wrap up, now the world is starting to open back up. What are you excited about now here that the world's opening back up? What have you been dying to do?
Go to Home Goods. Yeah.
So there's more decorations coming up at the house.
Yeah. Yep. Home Goods is open. And also the zoo. So that's exciting. I'm looking forward to going to the zoo and our pool. Summer is definitely my favorite season. So the pools are taking, smaller amounts of people and social distancing and all of that, but looking forward to that. So had dinner at a restaurant with some of my good friends on Saturday, and that was awesome. Just kind of the simple joys. Yeah.
Yeah. So, you went out with the girlfriends. I didn't get the chance to go to the restaurant. So, was it weird? Was it strange? Did you feel safe?
Yeah, we felt safe. We had to wear masks to our table, and then we got to take them off. And the servers wore masks and everything. So that's still a little bit weird, but it was just nice to be out and to socialize and have someone else pour your drinks.
Well, very good. Well, as we wrap up, this is something again that we want to bring or we want to bring frequently as to what the market's doing, because again, there's a lot of false narratives out there as to, the market's crashing, we're building a bubble, what's going on? Oh my gosh, we're getting outbid by everybody, and we have to pay $25,000 over list price. Well, we want to look at the numbers because I want to give factual information. And I really, really appreciate Brenna and her company Land Title, because they dig into the research, they dig into the numbers to allow us to have these high level conversations, to not just say, well, I feel the market's doing this, therefore that must be a fact. It's probably a little bit different.
Yeah. And, if you listen to the news, they're still talking about, they're just focusing on the solds being down. And that can be kind of scary, right? But if you really look at it, it can be explained and it's not as scary. And it's actually pretty predictable that way. Like, okay, well, yeah, we expected the solds to be down because of what happened last month. So, yeah.
Yeah. So information, I think it's still a good time to be a seller. I think it's still a good time to be a buyer because money is super cheap. It's a good time to do something because we ultimately know what it looks like today.
Yep.
So, All right, Brenna. Well, we're all wrapped up. We're finished for today. Thank you again so much. We'll be back next month with the June market update. I'm excited to see what those numbers are.
Yeah, and I have started a new thing, so I wave in after every little meeting. I saw a meme about it that was hilarious. So you can join me if you want with your little wave to say goodbye. But
Yeah, normally we would say goodbye, on the phone. If we're leaving, we might say goodbye or wave or give a hug. So we'll wave, we'll sign off, we'll be done for it. All right. Thanks again so much, everybody, for attending, and we'll see you with the next one.